Most traders are trading blind. They chase price, they react emotionally, and they wonder why they lose. But what if you had a daily battle plan? A clear roadmap that told you exactly where smart money is likely to step in so you could trade with sniper precision. That is exactly what I'm going to give you today. This is the Sentinel playbook. It's a strategy that I execute every single day, and I share my full game plan for free across all my socials, YouTube, and my newsletter. So if you want to trade with a proven system instead of gambling, stick with me. And at the end of the video, you can grab the entire Sentinel playbook 100% free, no strings attached. So how does this work? Every morning I break down the Sentinel game plan across my socials and in my free newsletter.
I always have one line in the sand and we take 3 targets, 3 bull targets and 3 bear targets. So this is a screenshot of how it works. So we have one line in the sand, we have 3 bull targets, and we have 3 bear targets. Well, that's very easy. We're gonna look inside. Gonna look at the notes. You see, it is all empty. It's never been used. I made this weekend. I have exactly no data. What I did is I took all the playbooks that I use, all the playbooks that worked best for me. So I got DOM playbooks, I got footprint playbooks, I've got candlestick playbooks, and I mashed them all together into one big giant playbook. And I outlined the rules in 10 easy to understand bullet points. So what are we going to do first? We are going to do the pre-market line in the sand definition. We're going to identify the session's line in the sand using high volume nodes, prior POC, VWAP, major liquidity zones. And I will outline these every day in the daily plans or in the newsletter. So this is a bull bear sentiment shift line and the foundation of every trade. We're going to watch these levels. I'm just going to put them on my screen again so that everybody can see this. We're going to watch these levels. This level is a line in the sand. Above the line in the sand, we are bullish. Below the line in the sand, we are bearish. So, the pre-market definition, I will always give a market plan so you don't have to, a game plan so you don't have to find it. So what we're going to do is we're going to confirm line in the sand strength before executing. We're not going to take blind trades. We're going to validate the line in the sand with either footprint, delta, or DOM. We're going to look for aggressive absorption, stacked bids and offers on the DOM, or directional markets or orders before entering. We're not going to take just blind trades from this line in the sand. Also, if you just trade candlesticks, you can also trade retests or trade wicks or whatever you like to validate that line in the sand. As you see here, on this day, we had a clear retest of the line in the sand right here before it took out target 1, target 2, and target 3. You could also long here, but here you have no validation of a long right here, except for maybe this one, but it didn't hit target 1. All right, let's get on. So 3 is we're going to execute trades with order flow precision. When a long setup presents itself, it means that price shifts above the long in the line in the sand with strong bid absorption, with positive delta, with rising footprint volume, then we can enter long. One of those 3 or one of those 4 is good. If, for example, you want to take a long, but the delta is shifting into the red, you don't go long. For a short setup, right, exactly the same. We go below the line in the sand. We have sell side dominance, which means sell imbalances, negative delta, stacked sellers on the DOM, then we enter short. For our optimal stop loss placement. For longs, we put the stop a few ticks below the line in the sand, and for shorts, we put a few ticks above the line in the sand. which is actually, I think, very logical. If you want a long, your stop will be here. And if you want a short, your stop will be here. Everybody agrees? Everybody agrees. Nice.
Yes, I agree.
All right. So, guys, we have this structured position scaling. This is really important. So we're gonna make it so that we hit 2 targets at first. If your account can take 3 targets, you can take the 3 targets. So what are we gonna try to do is we are going, just in case of a long, for example, you want a long from this one, you want to take 2 contracts, you want to target 1 and you want to target 2. Target 3 is far away. The possibility that we hit target 3 is most of the times a little bit slower, but if you're going in with 2 contracts, you can target 1 and target 3 and adjust your stop as you go. So the last 2 weeks, my targets have been hit every single day, just so you know. So you enter with 2 contracts at first, just to test contracts near the line in the sand using footprint or 1000 volume charts or whatever charts you use. These are just the charts that I use. If high probability order flow shifts happen, you can add size within structured risk parameters. And we have a target-based exit strategy, which is target 1, the first exit, which is mostly an order block or a VWAP or a first liquidity zone. Target 2 as our primary target, which mostly is a high or a low. And target 3 is the extended move, which is key imbalance, naked POCs, former supply and demand areas. So target 3 is optional. We take a trailing stop if target 1 is hit. Right here, target 1 is taken out. Our stop moves to break even. So if we have taken an entry here, our stop moves to break even. If target 2 is hit, our stop moves at target 1. And if target 3 is hit, we don't have any stops anymore. We close down for the day. Easy as that. Also try not to trail exactly underneath the target line, because try to target under a high volume node, try to trail under a lower high, under a higher low, stuff like that, you know, structural stops, not just blind stops at a target. When do you need to immediately exit your position? When footprint or delta confirmation tells you that you are making a big mistake. So exit remaining contracts if opposing delta spikes. Let's say we are in a long and delta shifts bearish all of a sudden, we have absorption or we have momentum loss. If we have delta divergence, for example, you can take a partial or even a full exit just to be safe. Also, if you have large passive order blocks near your line in the sand, consider a early exit, or if strong bid support appears after the line in the sand reclaim, add some size strategically. Which means if you're going long and you see on your DOM a lot of buy limits being added here, then you can safely add another contract and target this one. If, for example, you're going long and you suddenly see a lot of selling delta moving in, yeah, then it's only logical to leave your position and not be as stupid as to think it will turn around in your favor. Which is all logical. It's all simple. It's all very logical. If you see spoofing or liquidity pools, then we can reassess the trade's validity and we can just exit our position again. What we need is discipline and consistency. So we need to move to all 3 targets or all 2 targets in the beginning just to test the waters. And this discipline to take out these 3 targets will give us a long-term edge. We will also have the discipline to only execute line and sand trends that meet our criteria. not just blindly stepping every time you see price coming to the line of the sand. This will also make sure that we have no more random entries, no more emotional trading, but just systematic execution. As always, we will review and refine our performance via Tradezella. Wow, that was a lot of big words. So what do we need to make this work is we need clear entry and exit criteria. So the only trades you are going to take are delta imbalance trade in the trade direction. So for example, we are going into the line of the sand. Here's our line in the sand. We are going towards the line in the sand with this one. La, 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 la. But our delta imbalance is shifting to the downside. Then we can look for entries at this line in the sand. Second one, if we see absorption at the line in the sand, we can also trigger a nice entry. What else can we look for is a stacked imbalance, so a lot of selling imbalances at the line in the sand or past the line in the sand. And on DOM, of course, buyers lifting offers aggressively or sellers hitting bids aggressively. So these are our entry criteria. You can put this playbook inside your playbooks and you can just check every box. Did I have this? Did I have that? Did I meet one or two of my entry criteria? The more entry criteria met, the better, the stronger your entry. So the same we do for the exit criteria. Did we hit target 1? Did we hit target 2? Did we hit target 3? This is great for review so that you know in how many percentage of the executed trades did we actually hit target 3. Did I see a delta reversal? Because then you have to make an immediate exit. These are all immediate exit rules. Did I have absorption breakdown, like liquidity that got run over? Do I have a large DOM reversal? So, for example, we're going up. You have all these buyers stacking below, and suddenly there are no buyers anymore, and sellers start attacking, bam, 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 coming in. Yeah, then you can also take an immediate exit and new spike that violates structure. So, as we seen Friday, so Friday, what happened was we had the line in the sand, the yellow line, and price was going up nice and green. We hit target 1. We hit target 2. And before we could hit target 3, does anybody remember what happened? Vera, I think you must remember. We had a big new spike. It got, I think, 40 points back in 10 seconds.
Oh, yeah.
Yes. And it didn't hit our line in the sand. And afterwards, we just gone back up. Now, if we see a new spike like this that violates our structure, so that means that goes down our line in the sand, we exit immediately. If we see a new spike coming in that violates anything, we exit immediately. But as per rules, if you have hit target 2, your stop should be at target 1 or somewhere here down below. So you would have been safely closed and you had the chance to re-enter at the line in the sand again. Nice. Nee? So what are we also gonna check every time we review the trade is, are we in a downtrend, in an uptrend, are we in a ranging market, and is there volatility that I was not aware of? Did I trade before news, for example, or are we in very choppy market conditions? Did footprint show indecision? Are we choppy, which means is there a lot of indecision? Is there a lot of dojis? Is there a lot of ranging action? That would be a mistake to trade in. Like high volatility would be a mistake to trade in also. And now we are going to talk risk management, because I noted the risk management because I know a lot of you have problems with your risk. So what are we going to do? For me personally, you can add your own risk if you want, but for me personally, I will have a 6-point stop loss per contract. Meaning, if I go in at 6,000, my stop will be at 5,994 with 2 contracts, for example. We have 3 operating structures, which is the line in the sand. You can name them however you want. I call them the line in the sand, which is 3 contracts. So our total risk will be 18 points. We have the controlled burst, which is 2 contracts. So our total risk is 12 points. And we have the single shot, which is 1 contract. So our total risk will be 6 points. Now, let's say we do trade 1. Boom. With the full 3 contracts, so the full line in the sand. We take 1, 2, and 3 contracts. Our stop will be at the line in the sand with a maximum of 6 points per contract. If we have 4 points right here, okay, why don't you put your stop at a safe place, let's say 5 points, risk a little less. But we don't take an entry over 6 points of our stop loss. Take that in regards. I'm looking at you, female, who I'm not gonna name on camera, because I know you don't like that. So your risk is fixed. That's it. So for example, if your first trade got hit, you took your first trade, boom, you had your stop loss here, you had your targets here, target 1, target 2, target 3, it reversed, you didn't see it, it hit your target, just a natural way. All right, then you will go into your second trade. Your line in the sand trade failed, so now you're going to play it a little more safe, and you're going to go in with a controlled burst, meaning your stop will be exactly the same, maximum 6 points stop, but you will now only go in with 2 contracts targeting 1 and 2. Does everybody agree with this? First is failed, we take down the risk. That's why in the beginning, when we try to play with this strategy, we are just going for the controlled burst and the single shot, so that we only risk 18 points in the beginning and not 36. Voila, that's about it. If you lose 2 times in a row, guys, if you lose 1 time, take 5 minutes. If you lose 2 times, take 30 minutes. Review what went wrong. Don't go in. Stay out of these revenge trades. Does everybody agree with this strategy? And do we have any more questions?
Mag ik misschien iets vragen?
Absoluut.
De line in the sand, wordt die eigenlijk bepaald? Is dat gewoon een lijn dat heel veel getest wordt? Zowel boven als onder? Of?
I'm going to answer this also again in English, because this is a very good question and I don't know how to get out of here. All right. So I make my line in the sand every day using either high volume nodes, prior POCs, VWAPs, or major liquidity zones. So this is something that I provide for you guys. I provide the game plan every day, if you like. I provide the game plan right here in this Discord. I provide the game plan in my newsletter. I provide the game plan on my YouTube every day for free. So everybody will have the game plan if needed. Okay, Ferrier, bye-bye. So that's about it. So you can try to make the line in the sand yourself. no problem. You can try that. You can try to see where did price go and where is a high probability zone that our line in the sand will be either bearish or bullish. Let's say, for example, this week, I am not a bull until these highs get taken out. Underneath this, and certainly underneath this volume area, underneath this low volume node, I am still bearish because we are in a downtrend. So my line in the sand today will be somewhere around this high volume node. Is that an answer to your question?
Yes.
All right. Any more questions?
De moment niet.
For the moment, no. Okay, then
Nee,
I'm
het
gonna
is
quit.
duidelijk.
Okay, then I'm gonna quit the video.
So guys, that is it in a nutshell. I share these daily game plans across all socials and in my free newsletter on a daily basis, even post a video with charts daily here on YouTube. I would also like to ask that if you are new to Tradezella, I also have an affiliate code in the description and would highly appreciate it if you would support me by using that link on your purchase. I do fully endorse Tradezella and use it every day. It is without a doubt the most reliable and extensive journal software out there. Thank you for watching and let me know if this strategy is helping you.